Alright, so let's watch this fight. Cathie Wood versus Hindenburg Research. On the line, $42 million. So let's see what is happening. So let's take a look at our contestants first. In the blue corner, Cathie Wood. So who is Cathie Wood? So Cathie Wood is the founder and CEO of Ark Invest, one of the most popular investment management firms that focuses on growth sectors and long-term high rewards investments. Cathie Wood is the former chief investment officer at AllianceBernstein, so that's another big hedge fund manager. But she left the company in 2014 to start Ark Invest after her popular disruptive innovation funds were deemed too risky. Now, Cathie Wood was named to the 2021 Forbes 50 over 50 list of influential figures over the age of 50. And in 2020, she was named the best stock picker of the year by Bloomberg News. So why is she so famous besides being mentioned in Bloomberg and Forbes? Well, Cathie Wood has gained a massive following in social media communities such as FinTwit and also Reddit, and her focus on popular growth names is held by many as the industry standard of how growth sectors are performing. Let's take a look at some of the investments that she's in. As you can see, Tesla, Teladoc, Roku, Zoom, Square, all of these are growth names. And Cathie Wood has made several forward-looking forecasts that have gained both the ire and praise of Wall Street, because in 2018, she famously predicted that Tesla would hit $4,000 per share. And she was ridiculed at the time, but in January of 2021, Tesla hit that mark based on the split-adjusted basis. Cathie Wood has also predicted that Bitcoin will one day hit the price of $500,000 per Bitcoin. Now, she definitely puts her money where her mouth is by adding both Grayscale, Bitcoin Trust, and Coinbase shares to her various ETFs. All right, now to the opponent. In the red corner, Hindenburg Research. So who is Hindenburg Research? Hindenburg Research has been one of the most accurate short-selling investment research firms over the past few years, and they have revealed fraudulent activities by several different companies. First, they released a report on electric car maker Nikola Motors and accused them as operating an intricate fraud. Now, the timing of their report couldn't have been better. It was right here on September 10, 2020, just days after Nikola announced that it was entering into an agreement with auto industry heavyweight General Motors. And as you can see, the stock price plummeted from $45 all the way down to $10. Now, Nikola's CEO, Milton, was ousted as the CEO and never did deliver his long-awaited rebuttal of Hindenburg. Shares of Nikola have plummeted from, it was a high of $94 in June of 2020 to its current price of just over $15 per share. And Nikola is now the poster child of skepticism surrounding companies that come public via an SPAC IPO. Hindenburg took another shot at an electric car maker at Lordstown, right, releasing a scathing report in March, right there. This was earlier this week. And just last week, Lordstown saw both its CEO and CFO resign, as well as the company reporting that there is significant doubt that it will be able to meet previous production estimates. Now, Hindenburg has taken on other heavyweights and is well known for taking a short position and driving stock prices lower. So let's take a look at the heavyweight fight. Cathie Wood versus Hindenburg Research. Round number 1. Hindenburg throws the first punch. On June 15th, Hindenburg struck again, this time targeting popular sports gambling and fantasy sports company DraftKings. Now, some well-known investors in DraftKings include Walt Disney, the WWE owner Vince McMahon, and owner of the New England Patriots, Robert Kraft. So, a lot of potential brands could be hurt by these allegations if proven true. So what are the allegations? In the report, Hindenburg alleges that DraftKings SPAC merger partner, a Bulgarian company called SB Tech, is heavily involved in black market and illicit gambling that has ties to money laundering and organized crime. See, SB Tech was absorbed into DraftKings as a part of the SPAC merger, and now operates as an in-house part of the DraftKings brand. And therefore, allegations against SB Tech are allegations against DraftKings as well. Now, according to Hindenburg, SB Tech attempted to distance itself from the black market and organized crime. Prior to the merger with DraftKings, it even created a new entity called BTI that acted as a front for SB Tech so that it could continue to make revenues from markets where gambling was illegal. Hindenburg gives an estimate that 50% of SB Tech's revenues are made in markets where gambling is considered illegal. In fact, Hindenburg actually gives several gambling websites that have ties to known organized crime rings that led back to SB Tech and its subsidiaries. Now, these allegations are some of the most serious that Hindenburg has reported, with legitimate legal consequences that could have a long-term effect on the DraftKings brand. Looking at the chart, shares of DraftKings fell 4.2% following the news. So, does Hindenburg have a short position on DraftKings? Of course they have. So they expect DraftKings to go further down. So while Hindenburg does not reveal how large of a short position they own, fundamentally it's in their best interest for the DraftKings stocks to continue to fall. Now let's move on to round 2. Cathie Wood attacks. Enter Cathie Wood, who may be the personification of buying the dip. Cathie Wood is well known to target companies she likes long-term that are beaten down. And some of these examples include her continued support of Coinbase and Teladoc during their prolonged dips. So how much of DraftKings did Wood buy? She added 42 million worth, or 870,000 shares, following the Hindenburg report. Now, she added these shares to both her Ark Next Generation ETF and her Ark Innovation ETF. Now, this stock now represents the 19th and 17th largest holdings in each of these ETFs, respectively. Well, it seems that the markets were supportive of Wood's investments as shares of DraftKings closed the next day higher, outpacing the broader market. Now, there can be only one. So, who will win? Cathie Wood or Hindenburg Research? Well, judging from DraftKings' rise the next day, it looks as though Wood and Ark Invest have taken round 1 from Hindenburg. Now, the report from Hindenburg was thorough and detailed, but unfortunately for them, there's a very general disdain right now for short sellers in this market. So retail investors have made it their mission to blow up short positions across the market. So we just don't think Hindenburg's latest report will hold up against the queen of growth, the duchess of buying that dip, Cathie Wood. So what do you think? Who will win this fight? Cathie Wood or Hindenburg Research? Leave a comment and then take a look at these other videos that I made for you that are popping up on the screen right now. All right, I'll see you over there in another video. Take care.